Hi, welcome back to our podcast, Good Deeds Real Estate with a Mission. I'm Nicole Quinn, and I'm sitting in for Diane Davidson today. I'm here with Bill Weidecker. Bill is going to take us through the monthly numbers.
Hi, Nicole.
Hi.
I have to say, it feels, it doesn't feel weird, it just feels different because normally I'm ribbing my wife or she's ribbing me, and I feel like there's gonna be a lot more decorum today as a result of our.
You can rip me if you need
Okay.
to. Okay.
Well, and vice versa. So, the annual numbers, now that we've got 12 months of 2021 under our belts, it's I find, not that the previous 12 months don't always look appealing when you're looking backwards for 12 months, but when you have an annual calendar that we all live under,
Yes.
it's always good to go back and go, this is the entire year. And so, if 2020 was any indicator of what 2021 was going to look like, they were very similar.
Okay.
And for instance, single-family homes were off in units by 5.5%, but way up in dollar volume.
Okay.
And the reason being is as prices escalated. So last year, 2021, we sold 17,465 houses. Call it 17,500
Okay.
for that
Nice round number.
35 unit gap. The year before, we did 18,474. So call it 18.5.
Right.
So we went from 17.5 to 18.5. It's 1,000 units less, 5.5%. And I have to say that if we had enough inventory to replace those 1,000, if we had 1,000 more listings, we'd have 1,000 more sales.
Oh, yeah.
And
Absolutely.
so there's no doubt in my mind the drop in single-family home sales was just because we didn't have the houses to sell. So continuing to be a very opportunistic market for property owners that are considering selling in 2022, it's going to be just great. I can say that with certainty through the first 6 months. What the interest rate hikes that the Federal Reserve is going to do with short-term rates will have an effect on long-term rates. We'll see.
And for those who might not know who are watching, what are those projected to be?
So the projections are that the Federal Reserve is going to make a minimum now of 3 25 basis point rate increases. So basis points, 25 basis points is 1/4% in rates. And those are in the short-term rates, but the short-term rates always have an effect on the long-term rates.
Right.
And even though the mortgage market will say we won't have an immediate effect on mortgage rates based on what the Fed does, it almost always follows suit. I've never seen it not have an effect
It makes sense.
in the long run. So I will say that on the condo side, we've made, we were off 5.5% in units on single families. We were up 4.5% in units on condos.
Okay, so it kind of comes out in the wash.
Well, yeah, I think in terms of units, we're very close if you combine those two
Right.
categories, single family and condominiums. It's about the same amount. And I find it fascinating because the average sale price, we ended our average sale price at $395,000 for the year. That's up 17.9%, 18% appreciation. That kind of appreciation rate is not going to be sustainable.
Yeah.
It's not going to be one that I would predict for 2022. I don't think you can say, think of what a 20% increase looks like if you're at $400,000.
Yeah.
It's an $80,000 increase in prices. There's only so much that the market can withstand before 4, 5, 6, 7% increase in pay raises can't cover.
Right.
It just is not sustainable in the long run. Other than that, because of the fact that inventory has been so low, it's good. It's still good in the market. Rates continue to be decent. So if ever, I've said this before, it's a little bit sounding like a broken record or an old saw of some standpoint. It sounds the same and the same and the same, and that is, how can a market that so favors the seller
Yeah.
also be favorable to a buyer? And it's only because the rates have been so favorable.
Right. So now with that going up, maybe that'll bring the market back to an equilibrium?
Yeah, and I have a hard time knowing for sure what that's going to look like. And it might sound like I'm hedging my bet, but here's the big difference. Is what we have found in last year is there was a fair amount of cash sales, but there were also people that were not worrying about the mortgage and buying the house. So there were a lot of people that could over afford to buy.
Right.
Sooner or later, that comes into effect where as prices have continued to rise, you're going to get buyers that can't buy. They can't pay. Every time the rates go up and the prices go up, there's going to be, what we'll see, if I had to predict, if you had to hold my feet to the fire, I'm going to say you're going to see a stall at some point in 2022.
Okay.
Now that stall may look like this. Weidecker said there was going to be a stall, and yet prices went up by 5%.
Right.
That's a stall.
Compared to almost 20.
Yeah, and the year before that, so you're going to find that over time, we're going to reach a point where just the levels of appreciation are going to slow down, and that's a stall in the market. It's just the level of appreciation will slow up. That's where I see it.
Okay. So when people say they think there's going to be a crash, you would say there's more likely going to be a stall.
No question about it.
Okay.
I'll give you an idea. Let's talk about crash. I've been doing this since 1983, so in 38 years, I've seen some ups and downs in the marketplace.
Say so, yeah.
And in 2008, we saw a crash.
Right.
There's no doubt about it. In the fall of 2008, I have never been more fearful of the future financially in terms of the world than I was then. I was like, oh my God, can the stock market actually go to zero? And I was really scared about what the future was going to hold in store. I had a similar feeling in 20, I get my years mixed up now, in 2020, when the beginning of the pandemic started, because for that first month, I don't think anybody really knew what the world was going to look like from a health standpoint.
Right.
And we saw the market we saw employment, you saw what happened to employment. I mean, we went from almost full employment to 15% unemployment like that.
Yeah.
I've never seen it happen more quickly. My fear in 2008 was, oh my God, this is the road to Armageddon with regard to real estate prices. It was a huge bubble. Here's what we found out, is the market dropped by 25% over a period of 5 years.
Right.
So none of it was overnight.
Right.
We did see close to double-digit drop in properties 2 years in a row. It was 9% and 9.9%. You go, well, there's 20 of the 25% right there. The point is that there was plenty of time for, if people were like, well, my goodness, I guess we should have sold. Well, you still can. And yes, it might be for less, but it's not going to be, we're not going to see this market go back to $200,000 sale prices.
Right.
It's just not going to happen.
Right.
Supply is going to continue to be an issue.
Okay.
And now here's what I'm going to, what are the things that you can look towards to say, are these touchstones for a market starting to lose some steam? Days on market. Over time, if we're finding that days on market starts to increase, meaning there's more showings to offer ratio, and days on market to offer ratio start to increase, we start to think, okay, that has something to do with supply. Where is supply and where is demand? See, right now, it's the classic part of what ramped up appreciation is, inflation is this, too many dollars chasing too few products, right? We can go back to our early economics classes. Real estate is too many buyers chasing too few houses.
Right.
When that starts to change and we have more houses and less buyers, we will get to some equilibrium. Whether that's this year, I can't say. Hope that was helpful.
It was very helpful.
It's hard to give all of this information in a few minutes, and yet that's the attention span of all of us these days. So
that's very true.
If you're looking for more of a drill down, here's what I would say. If that's the case and you want to go, well, how does my house fit in the world? That would be, let's do a one-on-one and have a sit down and go, here's your equity, here's what things are gonna look like for the
Right.
next year,
Yeah.
and here's what you might have to do to your property to maximize your return. So
Right.
that's a much bigger and broader conversation than we can have in a few minutes on the internet.
So that's where the shameless plug comes in. If you have that question, contact someone on the Fine Homes Group team.
That's it, please. We're just a phone call away.
Yes. All right, well, if that's all we have for today, then I think that's
It's been a
it.
pleasure to be with you.
It's been a pleasure to be with you too. Thank you for answering those questions.
And I didn't pick on you.
Not one time.
That's it.
Not one time.
All right, good being here. Thank you.
That's all for today. Thank you so much for watching. This has been Good Deeds, Real Estate with a Mission, and we'll see you next week. Don't forget to subscribe on YouTube or follow us on your favorite podcast platform.